Tesla shares have crashed 15%, but they could be due for a short-term rally while the broad market sees its biggest one-day drop since 2022. But more pain is probably ahead. But we are seeing green shoots in healthcare and gold that are continuing to push on up. It's great to have your company. My name is Jessica Amir, a market strategist here with Mumu. You're tuned in this March the 11th, 2025. So anxiety and fear are continuing to swell as US President Donald Trump's policies are causing lots of panic about the R word. That's, of course, a recession. I'm not sure what else you were thinking when I said the R word. But the bad news is because we're awaiting Trump to show his full deck of cards, of course, all the tariff cards to be shown, we don't really know what could come. So this uncertainty is questioning what is going on with US stocks, and basically we're suggesting that more pain could be ahead. So how is this anxiety being expressed in stocks? So we're seeing stocks be brutally hammered overnight. The NASDAQ 100 crumbling 3.8% on Monday. That's its biggest drop since 2022. The S&P 500 also seeing a very sharp pullback of 2.8%, but basically, the worst day since 2022. If you think about standout stocks that saw brutal declines, Tesla saw the most selling among the heavyweights. Their shares, as we said, plunged 15% to $222.15. So this is a chart that shows that Tesla, their stock is now down 54% from their record all-time highs. So a couple things led to this decline overnight. One of those was that UBS downgraded their projections for vehicle sales for the full year. Second of all, Elon Musk also said that because he's head of Doge, he's running his other businesses with, quote, great difficulty, unquote. But as we said at the outset, Tesla bulls will probably notice that it's technically an oversold territory. Now, this finally suggests that we could see Tesla shares rally up because of algo trading. May you potentially see Tesla shares rally up in the US session tonight? Possibly. Or will it happen at some point this week? Maybe, but it's probably likely, maybe because of a short squeeze as well. But what I'm suggesting here or about to tell you is that I do believe that the rally that you see in Tesla, if we see that overnight or later this week, it's probably going to be temporary. The fact is that we do have Tesla not immune to, it's not immune to large pullbacks. So just cast your mind back to Tesla's drop of 74% that it had from 2021 to 2022. That could be played out now. And the reason that Tesla experienced that brutal fall of 74% back then, and why it could maybe be played out now, is because the market was adjusting for increasing competition and slower sales. And it seems that, the market is toying with this idea now. But as we said on our deep dive into Tesla, I do believe that Tesla shares will eventually recover because they are rolling out their Model Y, the Cybertruck, and their Optimus, and all of that is likely to push up revenue and push prices or costs down. So, long-term bullish scenario for the very long-term bulls seems intact, but short-term pain more likely ahead for Tesla. Strategy also saw heavy selling overnight. Their stock fell 17%, and that's probably something to do with the Bitcoin price falling to $78,000 at one point. As we covered, I do believe that Bitcoin could maybe head back to $74,000 at one point. Head to Mumu's platform and I do a deep dive into why that's probably the case. But basically, you do need to consider that Trump's tariffs, they've yet to be enacted, and that's why I'm saying there's more pain ahead. After they're enacted, then the US faces retaliation. Now, because of this uncertainty, investors are heavily moving out of anything that's high growth, high risk. So that's why tech stocks are continuing to see selling. That's probably going to be the case for some time, while investors are rotating and parking their money into stocks that are gaining momentum. Healthcare, agriculture, real estate and investment trusts, all these sectors provide more stable returns. Now, speaking about stable returns, this is a stock that punched the lights out last night. Regeneron, their shares rose 5.3% to their highest level since December. Basically, this company came out with good results from their skin disorder treatment. Their trials met their goals, and so that's why shareholders are liking what they're seeing. So this will probably continue more broadly, stepping back away from healthcare. We do think that this volatility will continue until we have more certainty about those tariffs. So just keep that on your radar. And we just want to show you why we're also saying that, sure, the market's fear gauge overnight rose to 27. That's its highest level since July 2024, when we saw mass fear about the Japanese carry trade. Now, let's just demonstrate what actually happened when fear has risen above these levels that we're at now. So if you cast your minds back to the trade war of 2018, then we saw Trump's tariff trade wars saw fear spike to 36. And as we said, fear is now at its highest level in over a year. It's at 27, but I believe that the fear index could get back to 36. Then what does that mean? When fear is usually this high, you see massive drawdowns in tech stocks. So in 2018, as we're demonstrating here, the NASDAQ was down 20%. So think about what we're dealing with right now. The NASDAQ 100 is only down about 13%. So just taking out what I'm saying that there's more pain and suffering to be ahead. Also, the similar scenario played out in the ASX closer to home. In 2018, remember, as I've pointed out previously, the Aussie share market was down 15%. So think about the Aussie share market. Now it's only down 7.8%. Another I guess, bow to pull would be to think about the semiconductor ETF, as we spoke about yesterday. In 2018, that ETF was down about 29%, almost 30%. Right now, that's only down 24%. Basically, all I'm saying is we can expect more selling ahead. As for the Aussie share market, sure, the Aussie share market is probably going to erase that gain that we saw yesterday. More darkness is probably going to be expected, but market stalwarts, those that offer upside in market downturns, they're probably going to continue to shine. So well done to those that are invested in some of those agricultural and consumer staples names, such as Ingham's. Ingham's shares are up 8% this year. A2 Milk is another stock that's punching the lights out. A2 Milk shares are up a massive almost 40% this year, up 39% to be precise. And gold stocks are continuing to rule the roost, dominating the best performing posts this year on the Aussie share market. Let's have a look at one of those, West African Resources. Wonderful performance. This stock is up 56% this year, really, as gold is continuing to hold at record all-time highs. Despite a little bit of a pullback, gold producers are continuing to generate remarkable revenue growth, and that is expected to continue. Other stocks on the ASX in the gold space that are doing really well as well include Ramelius Resources, up about 34% this year. There's always pockets of green and gold. There's always a bull market somewhere, and that's our job to bring it to you. For more information on stocks that we've covered today, head over to Moomoo's platform. Stay safe, happy trading. See you tomorrow.